Thank you very much and welcome everybody. I think we have an interesting topic today. My name is Maurice Mureau. I'm the CEO of Hodl, a fund manager in digital assets with different strategies in the Netherlands. Today we have an excellent panel. I will give the opportunity them to introduce themselves and then we'll quickly go to the topic. So, Yves.
So I'm Yves Choueifaty. I'm the president and founder of TOBAM. TOBAM stands for Think Out of the Box Asset Management. Our goal at TOBAM is quite easy to summarize. It consists into providing very sophisticated clients with an access to what BlackRock is not yet doing. So we started almost 20 years ago in the field of smart beta, 10 years before BlackRock. Then we launched a fund passively invested in Bitcoin 8 years before BlackRock. And today we are working on what is beyond Hodl.
Hello everyone, Nikita Fadeev from Fasanara Digital. We're a hedge fund that's investing in crypto since 2018. We run a variety of strategies from market neutral, where we trade high-frequency trading strategies, and also we have a venture fund where we invest in early-stage projects, and we recently started a multi-strat where we back some emerging managers.
Thanks. Hi everybody, my name is Michael Ashby. I'm the CEO of Algoquant. So first of all, thank you everybody for being there. I wanted to get some energy going for this panel. I'm going to help our moderator. So we are a large multi-strat as well. Similar to Fasanara, we allocate by SMA with 26 pods, global, and run capital for 2 family offices, as well as some external investors in the future. Thank you.
All right, thank you very much. So it all started out, I think, in 2020 when Michael Saylor of MicroStrategy decided to open the passive Bitcoin to the traditional world. He kind of turned his company from a software company into a Bitcoin holding company. And last year we saw a little over a year ago the launch of the ETFs. I think that's been a great success if you look at the numbers and how quick it went. But it also kind of commoditized the whole Bitcoin hodling area. So this panel is all about what strategies can we actually deploy beyond hodling. So first question to Yves. How can active strategies contribute to the concept of going away from hodling and be more active in it?
Okay, so there are 2 ways to be active. Now, the first way, being active in fact is simply the opposite of being passive. So either you focus on the alpha or you try to focus on the beta. Our way, what we look at TOBAM, it is that in fact most of our clients, if not all of our clients, are bullish on Bitcoin. In fact, if you look at typically MicroStrategy, today MicroStrategy exhibits a premium, but it can be proven in fact that if you are bullish on Bitcoin, there are a certain numbers of scenarios in which owning MicroStrategy is still better than owning Bitcoins. And because the strategy of MicroStrategy is dynamic. Now, if you consider simply a company that would sell puts on Bitcoin, if you are bullish on Bitcoin, it may make sense for you to own this company instead of buying Bitcoins. So the idea is to build in fact in some kind of a smarter beta than in beta 1 strategy on the Bitcoin. You can do that many ways. You can put in place some arbitrage, opportunities. With the future market in Chicago, typically it's not well arbitrated with a physical Bitcoin. You can sell some out of the money puts because you are positive, you're bullish on Bitcoin. You can, take the Gaussian curve, remove some very bearish portfolios, and say it makes sense to expose my clients this way. Or you can allocate to some active managers, to some people that believe they can generate alpha and have a relatively large range of strategy that will end up with what Michael Saylors calls a Bitcoin yield.
All right, thank you very much. And Nikita and Michael, Yves referred to you as the active manager as well. Are you already using these kind of strategies in your Bitcoin holdings?
Sure. So we started back last year in January. So we were thinking that it's pretty likely that ETFs are going to be approved. So we started preparing in advance and launched a Bitcoin share class in January 2024. Essentially, just to double click on what is it that we do. So effectively, our goal through this flagship fund that we launched in 2019 is to look at all the markets, 15 different exchanges in real time and spot those mispricings. They could be both in terms of spot to futures, the basis trade, or it could be price itself, where we are trying to arbitrage this half a basis point type of profit net of commissions. And so essentially, the more mispriced market is, the more essentially liquidity provider, we're above all think of ourselves as liquidity provider, is rewarded for their service. And so the key thing that enables at least us and how to do this Bitcoin yield strategies is the portfolio margin accounts that started to be popular back 3-4 years ago, where you can use Bitcoin to collateralize any type of derivatives. And so for all that matters, we can perform our perpetual to perpetual, futures to futures arbitrage using any collateral for what that matters. The key is that any P&L that we generate, we need to hedge it and convert it into the coins that invested. And so back to the initial premise, so we launched this product that looks to take in either dollars, and we buy the Bitcoin on behalf of investor and then invest it, or take straight up Bitcoin and invest it and look to generate yield in kind. So you maintain your long and will seek to increase the quantity of Bitcoin that you have. And we charge on this fees on this increase in the coins. And so that product has been quite successful for us. Now about 30% of our assets are in Bitcoin denominated, and now we're going further than that and evolving from a purely market neutral to start to essentially offer this diversified portfolio of actively managed strategies, but risk managed by us in real time and through our proprietary operational setup that we've been harnessing for the past 6 years.
Thank you. Michael, you're kind of implementing similar strategies. What are the primary risks and challenges associated with these kind of things? I think we have a lot of traditional finance people here in the audience as well. Yeah. They always look from a risk perspective.
Yeah, sure, happy to. So I guess just to quantify it, like there's $1 trillion of crypto assets, or give or take, right, in Bitcoin. And there's probably about, $2-3 billion of Bitcoin active managed strategies in this ilk, right? So it's a very small amount. So there's a huge opportunity set here. So to answer your question, we look at sort of all the operational risks as being first in line. So, in traditional finance, you think about, okay, how do I manage my portfolio risk? How do I manage my drawdown, et cetera, et cetera? In crypto, you have to almost put the operational risk right next to it or in front of it. And the reason for that is such a nascent industry. There's very few firms that have the scale, size, the financial backing to be able to provide the kinds of systems, processes, et cetera. So I'll use one example. If you look in traditional finance and equity investing, you have a plethora of OMS systems. You have Escastle, Infusion, Broadridge, all these different systems which everybody's very comfortable with. They've got private equity banking, et cetera. In crypto, there's probably 3. And of those 3, they're 3 or 4 years old, maybe 5. And they have smaller teams, they have less clients, they have less revenue to invest. And so when you start to look at using these systems, which in traditional finance you don't think about it, you just take it off the shelf and plug it in. You get it from Morgan Stanley or Goldman's PB. In crypto, you get these systems and you're like, okay, it only does half of what I needed to do. How do I monitor my reconciliation? How do I rec all my trades? How do I look at my portfolio risk? How do I do my compliance? So you end up having to build a lot of the stuff yourself. And with that comes capacity risk, all these issues. And so I think from our perspective, we've invested a lot of time and capacity to really make sure that we're trying to get to the same grade as TradFi in terms of the processes systems. But it's an uphill battle. The other thing I'd say, and similar to Nikita, we allocate to a lot of external managers. So we have 26 pods, and I say half of them are external. We look at probably 3 to 4 teams a week. I'd say 80% of them are bold-faced lying to us when they give us their numbers. And it's amazing because you send their tear sheet and you see their tear sheet, they're compounding 40, 50%. You then look at the numbers and they're like, no, they're not. They're compounding 10%. But there's a lot of folks in crypto who just don't do the work. And so I think that will change as folks like you get involved in the industry. There's more suits in this room than typically in a crypto conference. And so as we develop as an industry, the standards for due diligence is going to have to increase. So I'll stop there.
All right, thank you very much. So traditional finance, already mentioned a few times. Do we think we can actually benefit from the knowledge of traditional finance in this space? We all come from the digital asset side, but most of us do have a background in traditional finance. Can we actually learn from them and be able to implement their kind of security layers and risk layers into our digital asset space?
So myself, I am clearly from the TradFi side. So we run about $5 billion at TOBAM. 65% of our clients are public pension funds, and 70% of them are from North America. So I think that we cannot address this kind of clients without being at the best standards of TradFi. And in my mind, the only way to redevelop crypto is to abide by the standards of TradFi. So what we do, in fact, is finance. It has nothing to do with technology. We are a finance company, and we provide our clients with an exposure to specific assets. And we are absolutely, I agree with you, we are exactly abiding by their standards because they are the best standards when we need to abide by them.
Okay, and what if we get to the point that the banks actually see Bitcoin as a tier 1 capital? And we can, for example, lend towards it. What would that open up a new space?
You said when?
Well, maybe it is already. I think Goldman does it.
So I guess it's a huge issue right now. You have two sides of this coin. So you have the choke point in the U.S. So I think there's been a collective regulatory strategy that's sort of been unofficial to stop banking crypto firms. That's changing. As of last week, the Fed's on the record for saying that banks should come and be positive for crypto companies. So that's a huge win for the industry. The flip side is that there's very little balance sheet in the industry to be able to provide margin lending for crypto firms. So our best guess is there's about $6 billion of PB balance sheet globally. That's nothing in the scheme of things, right? So if you're looking to get leverage and run leverage trades, it's a very sort of small amount to support a crypto hedge fund industry. So our goal is to engage with the TradFi tier 1, tier 2 banks and bring them in. And so I'm actually here today for this conference. It's great. I'm spending the rest of the week meeting with the banks to try to encourage them and get them comfortable that the next 12 to 18 months they can start coming in and providing balance sheet.
All right, and if we go back to the derivative side, Nikita, do you have a grasp idea of what the size of the derivative market is now in Bitcoin for the audience?
Well, size in terms of open interest, I think last time I looked across everything was 100 billion, maybe just over that. Today there was a bit of volatility, so maybe the number changed a little. But I think the volumes are an interesting metric to double click, and there are a lot of ways, to look at the volumes, and probably a lot of them they should be discounted. They're not too trustworthy, but I think like the depth of the market is for sure like increased quite substantially, which is really important consideration for big players to come in. I think like as a market participant that's been in the space for a while, there is a bit of craving like for big investors, big hedge funds to get involved and for the industry to be validated. And as Michael was a little bit mentioning, the infrastructure hasn't been enough just yet. But I think like those are things that are moving quite quickly. And in terms of like the balance sheets and like lending markets, I think like there was a huge unwind in 2022, which kind of slowed down everything quite a bit. And this was, I think, the first iteration of this idea of like, let's try to generate some yield on coins. The big three, the Genesis and Celsius, BlockFi, that's kind of what they were trying to sell, where the retail was lending to them, and they would be lending those coins or or stable coins to the hedge funds, and we know how it all kind of ended up. I think like one important consideration with all of these yield opportunities is like if you're holding on the balance sheet 60, 70, in some moments much higher vol asset, then this yield of 3, 4, 5% that you can generate is maybe it's not that big, or maybe it is big, or it's enough to get involved. But all of these are, I think, considerations start to be much more on the radar for some of the allocators, where they holistically evaluate their, I guess, appetite of getting involved. But I think like as we keep on reiterating, the rails and the infrastructure and operational setup, those are hugely vital. And from what we've seen around and the standards that we kind of impose on ourselves they require scale. Like you need to have a lot of people in a team, a lot of infrastructure to support and to be able to essentially attract that institutional capital that's actually starting gradually to come into the space.
Thank you. And do you think that the infrastructure of the traditional finance institutions are evolving quite fast enough to cope with the speed of the space, or is it too slow in your eyes?
Well, I can't really kind of speak on behalf of all of the institutions. I think like what is quite non-controversial is that they're all very much constrained in what they do. I mean, crypto is a 24/7 market, and I think that's like a very practical limitation for some of the institutions. Like they need to run flatter book like over the weekend, maybe in terms of like transfers, in terms of being able to support the activity. Like we have, I think like the most active trading firms in the space are still either TradFi prop shops or crypto native with a few of the crypto native ones. Those are firms that can be much more nimble and much more risk seeking, let's say, and move fast. The big institutions that have a lot of stakeholders, that have a lot of legacy infrastructure, that are just constantly seeking for ways why not to do something instead of why do. I think there is just ample ways to just to keep on skipping it. But at the same time, once somebody starts making proper revenue and proper P&L out of the space, then I think everyone will start doing the catch-up.
Yeah, thank you. So we discussed how we can generate yield by derivatives, lending, but there's also a sort of an elephant in the room. Isn't there more hodling going on in the future if the US starts to decide getting a strategic Bitcoin reserve and just hold it?
Yeah, yes, it's quite obvious that the title of this panel is funny because we are talking about beyond hodling, when in fact nobody is hodling. We are extremely early in this business. You know there are only 21 million bitcoins. There is 100 million millionaires across the globe. This is 0.2 bitcoin per millionaire. Most of pension funds don't own any bitcoin. Most of sovereign wealth funds don't own any bitcoin. So today, the real challenge is not beyond hodling. It's to attract them to the hodling strategy. And when we see, the development of the IBITs in the US in less than a year, this is giving us a very small, idea of the potential. I was meeting with a sovereign wealth fund last week, and I told them, imagine a planet which is far away in the galaxy. Imagine this, in this planet, they have a very, very precious resource which is under, the Earth, a liquid and black resource which is very useful for everybody in the planet. And on the other side of the planet, you have a printer that prints something called banknotes. Would you imagine in this planet that they would exchange the precious resource against something that the other party can print without any cost in infinite quantity? Worse than that, imagine they sell this resource against 30 years bonds, against the promise of being given some banknotes that are printed without limitation and without any cost. So I think we are waking up about those kind of issues. And today, the people that are already involved in hodling are a very, very, very minute minority. And it's good that we are thinking ahead and thinking of beyond hodling. But let's remember that the proportion of people effectively hodling are simply ridiculous.
Yeah, small, you mean? Yes, but then again, if the US decides actually to hold a strategic Bitcoin reserve, it says something about their own dollar. So personally, I don't think it's a wise idea. But like you said, that it will affect their monetary policy quite steep. So I don't know if you have an idea if Donald Trump and his administration will go through with it.
I don't know. Who knows, right? But I think Utah's got 2 months. It's on the law book, so they have to give an answer within 2 months. So they'll do this, and they'll be the first mover. I think just listening to what you were saying about the your example, for me, the biggest issue right now is we have no fixed income market. We have no treasury. So if you think of how you could run a treasury department in a bank or a fund, we're really hamstrung. We can't actually find manageable yield within Bitcoin. So I think what Nikita and I do in our businesses is try to provide a yield on Bitcoin. And that's going to be a small portion of the Bitcoin hold strategy, but it's an important part. If people want to have a decent chunk of their personal wealth or their fund wealth within an asset, to be able to make yield on it is important. And so I think that's where we're doing work. So I think that combined with more safety and custody, more regulation, I think it's a no-brainer that this will continue to grow. And I'm personally very excited to be part of the journey.
And if you look at the passive ETFs, they already opened up with options as well on those. So I think even in traditional finance, they're looking how can we either hedge or protect, or on the other hand, get a bit of more yield on our products. Do you think that will continue as well?
I think the IBIT is really accelerating everything. Because when you were really only trading Bitcoins and offering Bitcoins, it was difficult for traditional finance to handle it. Now that there is the IBIT, in fact, the problem is on their side and they need to solve it. And they will not call it, Bitcoin lending, they will call it securities lending, because IBIT is a security. And it's really opening new channels, and they cannot hide anymore behind, the infrastructure. Because the infrastructure is a regular infrastructure, IBIT is a security. And if you tell them I have X million in IBIT, they cannot tell you anymore it's Bitcoin is something bizarre, we are not prepared to do that. You have a security here. When you look at high net worth individuals that are clients of banks, for the banks to say we cannot accept Bitcoin, it's one thing, but the banks have to accept IBIT, which means that now they have to address the fundamental problem and not hide behind technicalities. And I really believe the IBIT is really helping us a lot in terms of adoption, in terms of making our solutions available across the TradFi system.
Does transparency also help with it, that the blockchain provides?
I think it does, but we need systems to manage that. And so if you look at your traditional stock loan system or fund management system, most of these are set up to have 8 decimal places. We need 30, 40 decimal places. And so I previously worked at a large multi-strat hedge fund. It's about a 3-year turnaround to build those systems. And a number of these firms have started this, but we've got some time to go. I think crypto gets very excited about headlines, but there's a lag in terms of implementation. So my personal opinion is that we have the entry of large traditional hedge funds in the next 15 to 18 months. And that will be the revenue driver that will support a lot of what you were referring to.
Right. So time is moving faster than the Bitcoin price. We're in our last minute. Without going into the price, what do you think Bitcoin will be in the end of 2025?
I have written a small paper a couple of months ago in which I destroyed my bet. I think there will be no crypto winters on Bitcoin from now on. It's finished. I think the usual cycles of 4 years are finished. I really believe that Bitcoin will probably reach the escape velocity. And it's going to be something which will be the main standard of value measurement in the future, and this will start probably this year. As soon as a few central banks or a few very large governments will say it makes sense, everything is going to change for us, I think.
Right.
Well, I'll just say I think it's going to be higher than it is today.
Yeah, I'm also not in the business of, we run a quant strategy, which is the antithesis of going long, but I also agree. I think it's going to be held by more people than it is today. I think there's going to be exponential increase in holders.
All right. Thank you very much. And thank you for listening in.
Fabulous stuff. Thank you so much.